Hey everybody, what's going on? For those of you who don't know me, my name is Jacob, and in today's video we're going to be talking about 3 things you should know before you start investing. Although nothing is guaranteed when you're investing in the stock market, being informed on these 3 things can make you more of a prepared trader. Can you imagine yourself facing a stock that you invested most, if not all of your money into it, and all of a sudden it begins to lose a lot of its value? On the contrary, what if you actually begin to profit? Every day, investors exchange shares in the stock market. The stock market has been around for over a century, and it allows people to become partial owners of companies by connecting buyers and sellers. When investing, investors have 3 options. They can either day trade, swing trade, or hold for a long time. For those of you who don't know what swing trading is, it's basically holding for a couple of days. You guys are probably asking yourselves, why does this even matter? What does this have to do with me? In reality, these things that I'm telling you are very important because many people have become rich off the stock market. Some people make a living off it, but most, 90 to 99% of people actually lose money. As a day trader, I've learned so much from my mistakes that I've been able to build my own strategies and avoid falling into the same trap when losing money. Also, learning from professionals such as Ricky Gutierrez, Patrick, I forgot his last name, I think it's like Wheeland or something, and Tim Sykes, it has helped me speed up my learning curve so much, and I've learned so much from them. Alright, now let's jump into the good stuff. First, in this video, we're going to talk about money risk, then we'll talk about education, in other words, understanding the type of stock you're trading, and we'll wrap it up with how the news factor can affect the stock you're trading. So let's talk about your money risk. How much money are you willing to invest? 100, 200, 300, 1,000? It doesn't matter. Just please take the time right now to decide on how much money you're willing to risk. Pause the video if you have to. Let's say you're investing 1,000. Alright, now you gotta calculate how many shares you can buy of the stock. If the stock is worth 100, that means you can only buy 10 shares. Now, shares are very important, and the reason why is because let's say that you're holding on to 10 shares. As the price begins to move up or down from the price that you bought at, you're gonna start seeing the difference in your account. For example, let's say you're holding 10 shares and it moves up 30 cents, that's $3. So if you're holding 100 shares, that's $30. And if you're holding 1,000 shares, that's $300. And as you can see, the risk, it can get really risky if it's going down, or in other words, if it's going against what you bought. Because if you're buying too short and it starts falling, then you're going to be making money. Now, for those of you looking to increase your account on a weekly or bi-weekly basis, this is where the news factor comes in. The thing about news is that it spreads so fast. So when there's good news about a stock, it creates this buying effect driving the price up. And when the price moves up so much, it comes with volatility. With volatility comes risk. And that's where you must decide how much money you can invest into the stock and whether you're buying too short or not. You must also do the research to find out if this news is actually significant or if the stock is just being hyped. Overall, if you can understand your money risk, the type of stock you're investing in, and the news factor, you'll be able to know what to expect when trading. And although nothing is guaranteed when you're investing, being informed about these three things can make you feel more prepared as a trader and feel safer when investing than just gambling your money into something you don't even know about. If you're a new investor, I want to leave you thinking about one thing. If you're too scared to invest, you're going to miss out on big opportunities. If you hesitate, it can cost you. And if you're too stubborn to take a small loss, it can lead to a big loss. Thank you for your time. If you guys liked today's video and expect to see more soon, please do me the favor and click the like and subscribe button. And if you guys have any questions for me, leave it under the comments section. Once again, thank you for your time and see you next time.